First of all, I greet each and every one of you. My name is Dickson and I'll be your host for today. So first off, I want to talk about expansion, continuations, and reversal, right? Now, these are the three core themes where most traders find it difficult to understand in trading, right? First of all, your understanding your expansion is just basically you understanding the direction or the trend of the market, right? Also, the same thing with the reversal. The reversal is still understanding the direction of the market and then where or what is price doing. And then in terms of continuations, now you've already understood the direction of the market and then you've gotten where price is coming from. Maybe price is coming from this level and then you're speculating price to go back to this level. The only thing you're doing with continuations is for you to walk in that direction of the market until that maybe the external range liquidity, let me call it that way for this example, has been taken out. Now, I would start by breaking each and every one of them down. First of all, let's start with the expansion. Now, expansion in trading simply means price having a bullish or a bearish momentum, depending on the direction of the trend. Price giving us strong momentum in a particular direction. Now, this is the expansion. All of these minor moves we are seeing here are only retracements. All of the minor moves we are seeing here are only retracements, whereas the major moves we are seeing are the expansions. And sometimes we traders, we mistake or we misunderstand the expansions for the retracements or the expansions for the reversal. And that is what I'll be talking about today. All right. Now, there are times whereby, let's say we have this as our strong low. This is our strong low. And then price gives us internal range liquidity and external. Now, from a clear understanding or a pictorial understanding of direction now, we are already seeing this as our internal range liquidity, right? Where we want to see price take it out and then continue to buy because this automatically has become our external range liquidity. But this particular price action now, for instance, or this particular graph is about expansion, right? Now, this pullback we are seeing are only the retracements and not the reversal. Some of us might see this pullback as reversal, whereas now they are interpreting the movement as a sweep of this high and then a break of structure. What do you think they'll be looking out for? They would now be looking for sales. But then, are your sales valid? Your sales are valid or quite all right. But then you're taking the sell at the wrong structure. You're taking the right trade or on the wrong direction of the market. Clearly, we are seeing this low as internal range liquidity, where we want to see price take this low out and then we continue to buy. Now, since the major expansion or since the major movement was to the upside, whatever pullback you're having or whatever move you're having is not a reversal. You can't see this and then start calling it reversal, right? I will talk about how to get clear reversals. Then you can't see this and then you automatically tag this as a reversal and then maybe you're anticipating sales. No, in as much as your major expansions is still to the upside, you should only be concerned with the buys. Now, in a bullish market, there would be sales. Right? In a bullish market, clearly there will be sales, but the sales are not reversals. The sales are only retracements. Now, if we are seeing this as the internal range liquidity, once price takes this out, maybe we are anticipating buys of this key level, and then price tags at price straight to this key level. Automatically now, or ideally, we are now speculating buys until this high gets taken out because the major expansions or the major movements are still to the upside, all right? But then there are people who will automatically, after seeing this, we are seeing this as our internal range liquidity, and then there are other traders who are not seeing this as internal range liquidity. Rather, they are seeing this as a break of structure, or some of them might tag it as a change of market direction. Now, what are they planning to do? They are planning to take sales. But then now, is the expansion to the downside? No, this is our major break of structures, right? The major break of structures is to the upside. So clearly we should be focusing on the buys. Whatever the lower time frame is giving you is not a reversal, but a pullback. All right. So this is for expansions, right? Expansions are those large momentums in the market in a particular direction. I repeat, expansions are those large momentums in a market at a particular direction. Now, the major break of structures are still to the upside, right? So you should only be focusing on the buys until wherever price gets to before that reversal, and then maybe price trades to another key level just because we are bullish, and price trades to another key level where you want to see buys from. The high where most traders are seeing like a valid point to sell, that high should even be your own target, right? And then I'll show you examples for that, right? Let's talk about continuation, right? Let's talk about continuation. Now, for continuations in a particular trend, let me still use this example. Now, let's say we have this. This is like the basic algo structure most traders use. So that's why I'm working with it. Now, let's say price trades into this V-shaped key level where price disrespected twice, and then price started giving us some sort of reversal. All right. Now, price starts giving us some sort of reversal. Now, for price to trade into this key level, this is like one of the confirmations you need, right? Price trading into a bullish key level, and the trend is also bullish. Now, price trading into a bullish key level is one of the confirmations you need. Now, continuation trading now are those minor re-entries, that you get before price takes out your external range liquidity. I repeat, continuation in trading or continuation trading are those re-entries gotten before price takes out your external range liquidity. So let's say once price takes out this low as our internal range liquidity, the movement of price from this point, let me tag this as point A, the movement of price from point A to point B, whatsoever is happening in between point A and B, all of this now are all continuations. So instead of me to be focused, or some of us now, there are some traders whereby they don't have that strong psychology to take buys automatically from here. So what do? They wait for price to tag, and then they work with the continuations until this high gets taken out. And what are the continuations? The two basic understanding, or the two basic continuation patterns we all know is once price trades into your higher time frame key level, the first thing you're looking out for is a breakout or a break of structure. Now, a break of structure now has confirmed the buys that you are actually looking to take from this level. What then is the next point of validation? Single candle formation. Now, the single candle formation is going to act not just as a normal candle, but then that single candle formation will serve as both internal range liquidity. We want to see the next candle trade very close to this our key level, but then it will not trade into the key level. Now, these breakouts now that occurred from the as a result of the higher time frame mitigation, this breakout that occurs on the lower time frame will give us more confirmation or more confidence. And like I always love to I love to tell some friends or some trader friends I have that more confidence to a particular trade gives you more confidence, and it also increases the probability of the trade. All right, more confidence to a trade gives you, the trader, more confidence to take that trade, and it also increases the probability of that particular trade. Now, what do I mean? Since we have this single candle formation here where the high and the low will serve as internal and external. Now, what do I want to see? I want to see the next candle tap into this key level, taking out the previous candle low, and then we anticipate some bullish move until this candle high gets taken out. But then don't forget, the trend is already bullish. So basically where would be my target? My target will basically be at this high, because this is now the external range, and once internal range liquidity is taken, price moves until the external gets taken out. And these are the only continuations you work with. Higher time frame, sometimes it might be 4 hours break of structure, sometimes you might get 4 hours break of structure like this, and then once you trade back down, or you take maybe 4 hours break of structure, and you see your 1 hour or your 30 minutes time frame, you look out for breakouts. All right, price straight into your 4 hours key level, for instance, and then your 1 hour gives you something like this. Now, this is now a valid point for you to take buys from, because price is trading from your higher time frame key level, and then price has taken out higher time frame internal range liquidity. Now, this is also like merging continuations and expansions, right? Because now we anticipate the expansions to still be bullish to take out all of these highs. Now, what do you think is going to happen to the sellers at this level and at this level? Now, this is automatically, you might have one of the sweetest or the best trading system at that has ever been, right? But then, in as much as it is on the wrong side of the trend, or it is on the wrong side of the structure, or you as a trader, you only understand entries and you miss or you fail to understand how to properly understand bias, that is where the problem comes. Right, as a trader, that is when the frustration comes. No matter the kind of system you're trading, in as much as you fail to understand the bias or the structure of the trend, that's your entry model is going to frustrate you a lot. All right. Now, once the internal range liquidity gets taken, and we anticipate continuations. What are those continuations? Key levels. Maybe before price trades back to this high, you will be having bullish break of structures, and those key level are not just key level for key levels sake, right? Let me put it that way. Those key levels are not just there for fancy, right? They are only there because these are A-shaped key levels where price would have sold from initially, but then price fails that key level. What do you think is going to happen? Price is going to come back to refill those orders that was once here and then continue to buy until this high here gets taken out. Now, what are we having? We have higher high, higher low, and then you're seeing the expansions now. The major expansions are still to the upside. So why will I be looking for sales? All right. Now that brings us to reversals. And reversal trading is kind of complex because sometimes we misunderstand reversal trading as pullback, and then we mistake pullbacks to be reversals. All right. We misunderstand reversal trading as pullbacks and then pullbacks to be reversals. Now, let's say we are in a bullish market. For instance, the trend is bullish. We are having series of higher highs and higher lows. And then at this same level here, we have, let's say this is the daily time frame, and then this is a 4 hours price action. Right, price taps into a daily key level. Now you're building the trend is actually bullish, but you want to start building a bearish bias or a bearish approach. Right, price trades into this key level and then it closes below. Remember, this is one of the ways to build bias, but don't forget that the structure is still bullish. Now I'm talking about how to trade or how to spot reversals now. Right, how to spot reversals. Price trades into your higher time frame key level and then it closes below. This is now the daily key level, and then all of this internal price action here was 4 hours movement. Right, so now price trades into the 4 hours, the daily key level, and then let's see the 4 hours time frame gives us a bearish break of structure. Now 4 hours giving us a bearish break of structure, that alone is not just enough reason for we to automatically start selling. Right, daily rejects daily and it closes below. Remember one thing, that the major expansions was still to the upside. So basically, price might just react off this level, close below, and then let the next daily candle close above, and then the bias still continues. But then now, daily reacts off a daily key level and then it closes below. But one thing you should note is the higher time frame structure. The major structure rather was still bullish. Price was just reacting off an opposing key level. That is one thing you should note. Price is reacting off an opposing key level. And the only thing that is going to convince me now to start looking for sales at this level will only be the confirmation on the lower time frames. And the lower time frames are the 4 hours and possibly the 2 hours. Now, what am I looking for? Now, daily rejects off a daily key level and it closes below. The 4 hours has given us a bearish break of structure. Now, if the 4 hours has given us a bearish break of structure, now with this illustration now, I just want to draw your attention to something. Now, this is a 4 hours bearish break of structure, right? Let's say we have something like this. Let's say the trend is already bullish and then we have something like this. And then price breaks this low. Now, are you going to start looking for sales just because this occurred? Remember, your major expansion was still to the upside, right? You're still having bullish expansions. Now the issue that most traders have is just because your daily is reacting off a daily key level, and then the 4 hours gave you a bearish break of structure. Now, they will automatically start. I'm not saying that the sales here are not valid, but then you will automatically start forcing sales until price is going to take out this low. No. Now, the only way or the safest way to trade this kind, remember that the major structure is still bullish. Now, the safest way to trade this is once you get an entry off any key level, maybe this daily reject 4 hours breakout, and then possibly price tags into that 4 hours key level, you should not target any low as external range liquidity, because the market is still bullish. Price might maybe give us pullback to either of these key levels, and then we start getting buys, and then the sellers that are here holding their take profit or keeping their take profit below this low, price will finally reverse on them. Maybe for those who don't use break even, right, price might reverse on them. But then now, one of the sweetest ways to spot reversals is if price trades into your daily key level, your 4 hours gives you a valid break of structure or the most recent breakout. Now, these are the two things I am looking out for on the 4 hours to confirm a bearish break of structure, to confirm a bearish reversal on the higher time frame. 4 hours, this will give me either this most recent breakout or a sweep of liquidity and a break of structure. Now, you see how the sweep of liquidity did not just happen out of random. It's first of all tagged at our higher time frame key level, right? And this is now the daily key level. So for price to tag at this daily key level, which is here now, and then giving me a sweep and a break of structure, has confirmed the reversal. And now this is no longer a retracement where I want to see price trade back to maybe key level here and then I anticipate buys. No. All right, maybe the market was once bullish and then price trades into a daily key level. 4 hours either gives me a break of structure or a strong high, which is a sweep of liquidity and a break of structure. Now, these has confirmed the sales that I would be looking out to take. All right, now this sales has been confirmed by the daily rejects daily. The 4 hours gives me maybe a bearish break of structure, and or the 4 hours gives me a sweep of liquidity and a break of structure. Now, like I said earlier, that more confluence per particular trade gives you more confidence, and it also increases the probability of the trade, right? So I am having a clear approach to this. Daily rejects daily, 4 hours. Remember, the topic still remains expansions, reversals, and continuations, right? Now, I have explained on expansions, continuations, and then I just want us to pay very, very close attention to reversals, right? Because also there are times whereby price might tag on daily key level and then 4 hours gives you a bearish break of structure. But one thing you would notice that price will still pump back to maybe that same key level again, therefore taking you out at this level and then still sell, right? What actually causes this move here? Why didn't price just break this structure, trade back to this key level, and then we said, why did price trade back to this extreme first and then continue selling? Because in the forex markets, right, price needs liquidity. Price needs liquidity to move. So liquidity now is like money or fuel, right? So there are times whereby if daily rejects daily and the 4 hours just give a bearish break of structure like this, and then like I said earlier that I use the 4 hours or the 2 hours, right? So the 4 hours maybe gives us a bearish break of structure, and then dropping back to the 2 hours, what am I looking for? This bearish break of structure on the 4 hours should not just be a normal bearish break of structure on the 2 hours. What do I mean? A bearish break of structure on the 4 hours should not just be bearish break of structure without liquidity. That is why sometimes you might take your sell off this level and then you see price give you deep pullback first before it continues selling, right? Sometimes you would take your sell off this level, price will take you out and then still sell. Why did price take me out? It is because that's liquidity that should have been created at this level, something like this now, where you have your bearish break of structure, you have your lower high, lower low. What do you think price is going to do at this level? Price is going to take this level out and then we continue to sell. But then another thing, once price takes this high, once price takes out this high out, what do you think most people are saying here? a sweep of liquidity and a break of structure. Now they are now focused on the sells, but rather just because daily rejects daily, 4 hours gave us a break of structure, and the 4 hours hasn't taken out this lower high created. So there is no point for me to start looking to take buys. Rather, I would only see this as liquidity and then price starts to sell. All right, now let's get to examples. I think I have a perfect example on USD. Okay, now let me take this out first. How, or if we are to interpret this price action here, we are already seeing that if first of all, for you to even understand the expansions of the market, you zoom out. Maybe no matter the time frame you are, you zoom out first. Now, what are the expansions? We have the major, you can see how the major expansions are to the downside, right? Now, this is what? A pullback. And then what are we anticipating? Another major expansion to the downside, right? And then this is all you need to understand the bias or the structure of the market. You have lower low, lower high. What are we anticipating? A new lower low to be created, and then I've gotten my bias. So basically the higher time frame is bearish. Now, don't get me wrong, I'm not saying that you won't get buys, right? But then the buys are only pullbacks compared to the sales. The buys are only pullbacks compared to the sales, because if we zoom out again, you will clearly see that there were buys here, but then the buys are not, you can't even compare the buys with these sales. Same thing with here, right? And then price repeats. So first of all, the expansions of USD is bearish, right? We're having bearish expansions. So clearly now we should focus on looking for sales. All right. What is the most recent break of structure? The most recent break of structure of this chart was a bearish break of structure. All right, and not just any break of structure. Pay attention to the price action here. Price swept liquidity first, and then we had all of this break of structure. So clearly this now becomes, like I called it, a strong high. So basically we do not want to see price trade above this higher time frame strong high. We do not want to see price trade above this high and then we continue to sell. No. So for whatever reason, price closes above this high with a body of a candle. Whatever reason, price closes above this high with the body of a candle, we now have some bullish retracement. All right, not complete reversal. We now have some bullish retracement. Okay, our most recent break of structure on the daily time frame now was a bearish break of structure, which was this. All right, I think let's even start from the weekly. Now, the major break of structure on the weekly time frame is this. This is the major break of structure on the weekly time frame. So if this is the external range liquidity that was taken, and then once external range liquidity is taken, we expect a reversal to take out internal. And then once internal gets taken, we expect a continuation to take out external. And this is just how price moves from internal to external, from external to internal, right? From one liquidity to the other. All right. Now, there are so many ways. Maybe some persons know it as another name, but the thing I just want you to understand is the logic behind it, right? The external, once external is taken, price will reverse to take internal. Once internal is taken, price will expand. Price will expand, or price will continue in that same direction. All right. Now we had bearish break of structure on the weekly. Price came back, target this key level, and then if the internal is now taken out, this low automatically becomes the new external that needs to go. Now, will there be buys? How about the people buying at this level? There will be buys in a bearish market, but the buys are only for retracements. You can't automatically start placing buys and maybe weekly reject and then you start looking for buys until all of this high gets taken up. That is improper. Right, that is not accurate. So what you do is your major break of structure is bearish, and then you should only be concerned with the sells. Will there be buys? Yes. Can you trade the buys? Yes. But then you just need to understand if you are with the trend or you are countering the trend. Because if you're with the trend, possibly you might have wide stops and all of that, wide take profit and all of that. But then if you're trading against the trend, you know that you should have minimal take profit. All right. What do we have here? This is an open close key level on the weekly time frame, and that open close key level, if you should relate it back to the daily time frame now, that open close key level was now at this level here, and you see where price is currently reacting from. Now this is the daily price action. Let's use maybe the 2 hours. Let's use the 1 hour. I want to show us something. Now, using the 2 hours, let's work with the 2 hours. Using this 2 hours time frame now, what do we have? This high automatically that trades close to this key level but did not trade into it becomes the liquidity first, right? And then you can see what happens here. Price was once bullish. Now remember, these are only pullback, right? Does it mean that you can't go with these buys you're seeing? You can't. Clearly, you can get some entries, some good entries at this level, all right? But remember, the major expansions is to the downside, and then there's every possibility that price can trade back to your higher time frame key level, and then you start getting some major movements there. Now, remember, I also made mention of something that if you have your higher time frame breakout, your higher time frame breakout should not just be a normal breakout on the lower time frame. Your higher time frame breakout should be a breakout with liquidity on the lower time frame. And you see the reason why this key level, why price is reacting beautifully from this key level. Why? Because it was just a breakout on the daily time frame without any liquidity and all of that. But then translating this breakout without liquidity on the not even the 4 hours, sorry. Okay, it was even valid on the 4 hours, but then on the 2 hours time frame, now what do you have? You have a key level on the higher time frame with lower time frame internal range liquidity. So for price to take out this as internal range liquidity, this low automatically will be our external. What do you think is going to happen? What do you think is going to happen to the buyers at these levels? Because clearly these are good levels for someone to look for buys, right? All of these levels are only reaction points, right? And not reversal or retracements. But I love calling them reaction. Price might trade into that level, react a bit, it will fail. Trade into another key level, react a bit, it will fail. And then once internal range liquidity is taken, like I said, this is the internal range liquidity. Price won't stop until it takes out the external, provided that you are with the higher time frame direction. You are trading with the higher time frame expansions, right? But then if you're just trading just because I saw my entry model and I just want to take the trade, that is where you're getting it wrong. And somewhere along the line, you would get frustrated and possibly you will end the story with, I tried Forex trading, but that thing is too hard. I wonder how you might even see profitable traders as scam traders, right? Now, what do we have here? This is clearly a V-shaped key level. What happened at this level? Pay close attention. You see how price only reacted. Remember, I call them reaction points and not reversal points. Price only reacted a bit, pumped, and then finally we sold. All right, price reacts and close at this level. The next candle open. Where did the next candle trade back to? If you should also remember, I said the continuations, I'm even seeing everything here. The continuations I work with are only failed key levels. Now, where did price trade back to? You see how this is an A-shaped key level. This is an A-shaped key level that price disrespected once. That key level had internal range liquidity where price would have used to buy again. That same key level was disrespected twice. At this candle closed below that key level with a body. Now immediately it closes. You see where the next candle tagged, and then we are selling. Now you see how I would be confident in taking the continuations because I am with the higher time frame expansions. But how about the people saying price is reacting off? Price reacted, sorry, let me take this out. Price reacted off this key level, so let me start looking to take buys automatically. This is clearly even you, the trader, you should even know that this is not accurate because price is coming from the higher time frame level, and therefore price reacting from a higher time frame key level, it automatically makes all of the lower time frame opportunities you're seeing become liquidity. So instead of you to be focusing on buys, you should only be looking out for sells. Now, there are people who might take sell and then price is reacting, or maybe price is giving some bullish reaction. Automatically, you start closing. You start closing just like that. Now, you're closing now. This is not you closing because you understand price action. You're closing because you're not trading the chart. You're trading emotions. All right, you're not trading with the chart, you're trading emotions. So the only thing you should be focusing on should be sales. Basically, those reactions, those bullish movements you're seeing should not even be an opportunity for you to look for buys, but rather more opportunities for you to look for sales, more opportunities for you to look for sales until the external range liquidity gets taken out. All right, until the external range liquidity gets taken out. That is the only thing you should be focused on taking the sales and not even the buys. All right, now let's just work with one more example. Let's work with one more example before I hand over. Let's see the major break of structure on the higher time frame. What are we having here? Let's zoom out. Like I told you, one of the ways to build approach is just look for the major expansions. The major expansions on this pair is bullish, right? We're having bullish movement. Now, once you spot your bullish movement, you know one thing, that any sell you're seeing are only retracements. And sometimes the sell might take days. Sometimes the sell might take maybe a week or two. Right, but then one thing you should note also is that it is a retracement, and you can get sales, you can get selling opportunities on this your higher time frame retracement. But then once the lower time frame and the higher time frame, and I think I explained how to get to build the bias a bit, at least I said a bit on that once your daily or your 4 hour, your daily reject, and then your 4 hours gives you a bullish break of structure, or your 4 hours gives you a strong low, then there is no point of me looking to take buys again, right? Daily reject and the 4 hours has given me confirmation for the buys, then I would only be focusing on the buys until the high gets taken out, right? And yeah, that's for expansions, because you can clearly see that the movement of this price action here is bullish, right? And then what do you think I'll be looking out for in a bullish market? Will I be concerned with the sales? No, I would only be going with the buys. All right, now this is the weekly time frame. I've gotten the direction of the market. Let's see on the daily time frame. What will I be looking out for from the daily? The daily time frame, I look out for key levels, where potential key levels where price may react from. And then I can't just place I'm not a swing trader or a position trader, right? But if you're a position or a swing trader, that's okay. But then I'm a day trader. So I can't just place my buy limit on the daily time frame and then I anticipate price to tag me and then we continue to buy. No, right? Most likely I won't even do it. What do you think? I would only be looking out for key levels on the higher time frame where price might react from, and then the lower time frame I look for continuation until the external gets taken out. All right, now on GBP JPY here, remember the major expansion we are having is to the upside. Now me, I'm having a bullish expansion, so let me just call it bullish bias. What do you think I'll be doing on the lower time frame? I should only be looking out for buys, right? Any sale I'm seeing should only be retracements and not reversals. Now, what do we have at this level? This was clearly a V-shaped key level on the daily time frame. Now, if price now trades into this key level, for instance, if price trades into this key level, where do you think I'll be looking to exit? First of all, my exit should be at, or I understand that all of these highs are now liquidity. But then I don't swing trade like I said earlier. So I can't take my entry at this level and then I hold until all of these highs gets taken out, right? I love continuations. I love trading continuations. So instead, I would only, once price tags maybe gets to my TP, I look for more entry opportunities and I go with that. Once price tags, I enter, price tags, I enter until the external range liquidity gets taken out, and that is it. All right, now we have price was clearly reacting off this key level, right? Now let's see that key level on the 4 hours. Now, one of the things I made mention was that my higher time frame key level should have liquidity on my lower time frame, right? So that is what I would be looking out for. Now, what do we have on this? This is clearly the higher time frame key level. But then, if you pay close attention here, there was no liquidity. Clearly, you can't even interpret what really happened here, right? So, the only thing I would do on this chart is the closest key level to the higher time frame key level is the one I'll be working with, and which is now this V-shaped key level here. Remember, I'm still looking for opportunities. You see how I am only looking for buys and not sales, right? So this V-shaped key level here makes more sense for me to buy from. And not just only that, this place where the daily key level is an obvious liquidity where price will take it out. And you see what happened. Price takes out liquidity, trade back to the closest key level to my higher time frame key level, and then I may not hold until price clear all of these highs, right? I might not hold until price clear all of these highs. But one thing is certain, that my TP would be at external range liquidities. And like I told you, if this is the internal, this is clearly my new external, and this would have been the target. All right, if this is my internal, this is my external. You see what happened? External was taken out. Will I start looking for, or just because I'm seeing this pullback here, I start forcing sales or looking for sales? No. But then I'm not saying that price may not sell. But then remember, our major expansions is still to the upside. Now, there are sellers at this A-shaped key level, and also there are sellers at this A-shaped key level, right? But what do you think is going to happen? Like I also said, the key levels, the opposing key levels in an expansion are only used for reactions, right? The opposing key level in an expansion are only used for reactions. So price reacted off this key level. Let me make this line straight. Price reacted off this key level, and then we had this pullback. But then if you notice one thing, price did not just continue selling. Price did not just continue selling, but rather, let's go back to the higher time frame again. Now let's see the 4 hours. I just want to show you how to bank on continuation. Where did price react from again? Just because price took out this internal range liquidity and external, the 4 hours created for us a V-shaped key level. And then, like I always told you, or like I said earlier, that my higher time frame key level should have internal range liquidity. Now, should have internal range liquidity. What do we have at this time frame? Single candle formation. This candle traded close to my key level, but it did not trade into this key level. So basically, this candle becomes my new internal range liquidity, and then this high becomes my external. You see how just because I understand expansions and continuations, now will I be looking out for selling opportunities because of these bearish movements? No. Are there traders who took these sales and then they maybe exit at this level and then they make money off the market? Yes, they are. But now I just want to make you understand how to profitably trade your reversals and then trade your expansions and also with your continuations, right? So that would be all, and yeah, have a profitable week.
All right, that was a beautiful one. Thank you very much, sir. That was an eye-opening one, a very powerful one. Thank you very, 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 very much.